Is the market beating you up? Elite traders ask themselves these questions at a minimum, if not a few more. My name is Forrest. I invest in stuff. I'm a day trader. I trade my own account as well as the prop firm train that everybody has hopped on. If you ever want to be a profitable trader in your own account and be able to unlock six-figure trades, there are some very simple mental safeguards, i.e. questions that you can ask yourself every single trade, every single day. And we're not going to waste any time. We're just going to jump right into it. So here are the questions. The first question is this trade following the higher time frame trend? The second trade is, am I trading small enough risk? The third question is, do I have a thesis for the day? The fourth question is, am I tilted? And the last question is, do I have edge? Now, of course, there's more to the video, so let's go back to the top and talk about each and every one of these, right? So first, is this trade following the higher time frame trend, right? So for some reason, new traders love to be counter trend traders. I think this is because a lot of people see trading as this ego contest and a means to prove themselves on Twitter or YouTube or whatever. Trading is much like track and field, right? So I was a runner. That's why I think of this. I lifted weights with my teammates. I practiced with my teammates, but I competed against my teammates, right? When I was lining up to run the 400-meter hurdles or the 110-meter hurdles, right, I was competing against the people on my team. Now, we had relay races and things like that we would work together. In trading, you're not really working together, right? The most similar thing to that would be like my Discord community, right, where we all train together. We have a hypothesis that we form together, right? But outside of that, you don't need to prove yourself to anyone, right? This is a single-player sport, and don't be a counter-trend trader always trying to catch the pivot, right? There's a whole set of reasons why people do this, but they're always trying to catch the reversal, pinpoint a price where you're going to get a V and, get the perfect entry. You don't need to do that, guys, right? The most important thing is being right when you have risk on. It doesn't matter if you're wrong literally any other time. It doesn't matter if you post it on Twitter, 100,000 people see it and you're wrong. Guess what? If you didn't put any risk on, who cares? The very next trade, you put risk on, you're right. Bam, you made money. Everybody else got likes. There's a difference there. So the second question was, am I trading small enough risk? Most of you guys are trading way too big, especially people who are signing up for prop firms. Now, I'm a firm believer that if you're a new trader, you probably shouldn't use prop firms at all, right? The best avenue is probably to start out with your own account. This is what I did. And especially running a community where a lot of people are signing up for prop firms. Obviously, I'm an affiliate. And I'll say it, if you want an account, use my codes, please. I do get a little kickback. Appreciate, love y'all. But my honest recommendation is that if you're a new trader, start your own account. Why? Because that's going to keep you grounded. Okay. If you're making a modest $25, $50 every single day, that's real money. That's real tangible money that you can spend. You could transfer it to your personal account and you can get paid. Also, your risk of blowing up that account is very, very small if you're trading small. One of the problems, especially with all these prop firms, is that people are paying $16 all the way up to maybe even a couple $100, which is still nothing in the grand scheme of things. Even if you sign up for a prop firm account for $300 and you're getting access to 20 contracts or something like that, 15 contracts, you have to understand that to have access to that much leverage in your own account, you would need hundreds of thousands of dollars, okay, to trade that for real in real trading. Okay, so you're getting access to leverage and it's really skewing your perspective of what it's like to really trade a lot of these contracts or these derivatives, whether it's futures or whatever it is, okay? So reduce your risk and focus on higher time frame trading. Those two things go together, but a lot of you guys, your frustration is completely driven from the fact that you're blowing up accounts over and over and over again, which just wouldn't happen, one, if you were in a real account trading small risk, right? You wouldn't constantly be feeling this exaggerated level of failure. It would be easier to stick to a very specific trading plan. So that's my recommendation there. Trade smaller risk. The third question was, do I have a thesis for the day? Okay. You can't just show up and work hard. I know that we're busy. We have lives. You're probably doing this as a side hustle. You have a day job. Okay. I totally get it. I have a day job, actually. A lot of y'all don't know that. I work in the startup world, have a background in tech, selling software, things like that. Probably stop doing that sometime very soon. But nonetheless, you have to make time to form a thesis every single day, okay? So without a thesis, it's not enough to just show up and be focused, all right? It's not enough to just show up and listen. It's not enough to just show up and, do that every single day. There's a difference between working hard and working smart, which is super cliche, but you need to work hard and smart. You need to work smart first, and then you need to work hard on whatever you decided to do when you were working smart. And having a daily plan is part of that. Okay, this is going to play into what I said earlier was, does this fit my higher time frame thesis? So if you don't have a plan for the day or some narrative in your mind, basically saying, here's an example of that. I think NQ is probably going to close as a doji today, a doji candle, right? That's a small body candle with 2 wicks, equal length wicks on the side. And there's a few different types of dojis, doesn't matter. Nonetheless, you hypothesize that today is going to be a doji. Okay, so on the lowers, you should expect to see a sweep of the lows, sweep of the highs, or something like that, and a return to the middle so that you end up with a doji. If you think there's going to be a doji on the daily and you lose sight of that, or let's say that you don't have a hypothesis and somebody else does have a thesis on the daily and you're shorting the lows, well, it doesn't make sense to be shorting the lows if you think that the daily is going to close as a doji, right? Especially after we sweep pre-market or something like that, right? That is your long opportunity, especially as you're approaching the end of the day. You should be thinking, what does my daily candle need to look like? Stuff like this is so simple, but honestly will make you a ton of money. I promise you, if you follow the way that Sol and I trade in our Discord, a lot of the complexity and nuance really just comes down to fitting into a narrative of our expectations, right? There's a lot of information and layers, and a lot of the peeling back that we do is just basically saying, yeah, well, this needs to look like this by this time, or we expect it to look like this at this time, or we expect it to get to this level at that time, and so it's probably going to do this. It'll help you understand the randomness or the perceived randomness of the market. Number 4, this is a big one. I'm going to lean back for this one. I'll take a sip of my tea. Hold up, guys. So number 4 is, am I tilted? This is a big one, especially when you're in a trade. So there's a whole basket of mentality for this one, but ask yourself when you're in a trade, am I tilted? Am I chasing? Am I trying to fix my P&L? And I can see it right now. You're leaning forward at your desk. You're looking at the candlestick, every single tick up and down. You're trying to make a decision. It gets a little bit closer, like, maybe I should get out. It gets a little further away. Oh, I think I'm good. It gets a little bit closer, like, maybe I should get out. It gets a little bit further away. Oh, I'm good. But you're so zoomed in on like just the 3 or 4 candles around your entry, and you're not thinking about the bigger picture. Okay, no individual trade should make or break you. You need to trade smaller if that's the case, since I said that earlier. But if you're tilted in particular, there are some very easy signs. One being leaned forward, zoomed in, you're ignoring, the community that you're in, you're ignoring the voice chat that Sol and I are giving, right? The live chat basically saying, hey, don't get chopped up midday, and you're doing back to back trades, at 12:30 p.m. You're getting chopped up and you're just frustrated and you want to fix your P&L. You just want to fix it so bad. If you just get one trade in, you can fix it. You'll at least be flat. Here's the key, guys. It does not matter. Today, this trading day that you're watching this on, or if it's on the weekend, whatever, the next trading day is so irrelevant in the grand scheme of things. The most important thing that you can do is learn to control yourself, right? Learn to take breaks, right? So my advice is twofold. First is mechanical. Close down your broker, take a break, step away from the charts. There's nothing to figure out right now, right? We are humans. We're not these overly logical, rational beings that, everybody on the internet will try to convince you that we are. Okay, when we get upset, we can't think clearly. When we get frustrated, we can't think clearly. When we get euphoric energy, we can't think clearly. When we're tilted, we can't think clearly. So stop trying to think harder. You just literally can't. You cannot think in this moment. So stop trying to think, take a break, go outside, get a sandwich, drink a coffee, hug your family, do something, and maybe even be done for the day. But at minimum, take a break. The second one is, again, just more philosophical. This is my advice, and this is just some perspective for you. Okay, if your average winning day is $1,000 and you lose $200 today, who cares? It only will become relevant if your $200 loss turns into a $2,000 loss, and now you're wiping out days. It does not matter. It doesn't matter how much money anybody else you're trading with makes, how much money I make. It does not matter what anybody else did. What matters is that you only lost $200, and that's fine because everybody has red days. Okay, that person who made $2,000 when you lost $200, guess what? They're going to have a red day coming up, and it's up to them to minimize their loss just like you did. So pat yourself on the back, reward yourself for minimizing your losses. I think that's something that we don't do enough. People overly beat themselves up. I see it all the time. They literally feel like they failed as traders because they had a red day, even though you will have red days. It will happen to you. It's so normal to reward yourself for shutting it down. Feel good for recognizing, hey, I'm in an emotional state. I feel like I'm chasing, I'm tilted. Just say that to yourself. You can say, hey guys, I'm tilted. I'm going to shut it down. Come back, get some profits tomorrow. Boom. It happens to me. I get tilted too. Shut it down. Come back later. Come back tomorrow. It's fine. But reward yourself for making the right decision instead of beating yourself up. There's no point to beat yourself up over it. It's absolutely stupid. All right. The last question. Do I have edge? This is a big one. Here's another little story for you. Okay. You're sitting here, you're watching your favorite YouTuber live trade, prop firm or whatever it is, right? They market buy, they get in. So what do? You get in, you follow the trade. And why? Why? You need to ask yourself the question, do I have edge here? This goes into everything else that I said, okay? Do not follow people just to follow them. Do you have a thesis? Does it fit your higher time frame narrative? Okay, is this part of your playbook? Is this a mean reversion trade after a sweep of pre-market or overnight highs? Are we rejecting a previous POC? If you're not familiar with those trades, I did a video, 2 playbook trades. We'll link it here. Those are 2 of the most common trades that we take. Previous session, point of controls, and mean reversion trades after key level sweeps. Edge, right? There's something that I'm looking for and testing and looking for the market to show its hand that it's going to play into, price action that I can predict, right? Or have good expected value out of. If you're in a trade and you're hoping, you're like, maybe it'll go this way. You're like, maybe I'll just risk a few. It's okay if I lose a few. No, don't do it. Okay, lotteries, random things like that, I think are a complete waste. They're a bad practice. You should never take lotto trades. I used to, and it's something I always tell people in my Discord now. I see people doing it because it's like the first stepping stone to a slippery slope of just bad behavior. You should not be taking lotteries. You should not be chipping away at your P&L. Every single dollar counts. Every single dollar counts. Every single one. Every 50 cents counts. Okay, gain or lost counts. Okay, if you're in a trade, you need to have edge. It doesn't matter if you get out and it would have been green. It literally does not matter, right? If that's the case, then there's something that you should do there, which is journal. You should write down what happened and figure out why you didn't understand that it was going to go that way. Okay, you don't want to gain or lose money out of luck. If you get in a trade and get lucky, it doesn't matter because you will get unlucky. Okay, anybody, literally anybody can start trading right now, flip a coin, make $10,000. The difference is that somebody without edge will lose that money. Okay, and you might relate to that. That might be you. Okay, so if you feel like your P&L is random, it's not going to feel good. On the flip side, even when you make small amounts of money, and if it's out of a playbook trade, you're going to feel really good about it. This is something I've seen in my community, and I love to see it, right? And especially if you're growing a small account, it's going to feel really good because you're going to feel like you have that edge, especially when you're running the same plays over and over again. You feel like you're pulling money out of the market, and you know you're going to get it. Like, you know you're going to get it. And that's where you start to really become profitable as a trader. I hope you found this video useful. If you're looking for a trading home, check out Trade Edge. We have 50% off the first month right now. We are a community focused on teaching people how to trade and become profitable traders, not just in prop firms, but in your own account. Again, you can hit me up on Instagram, Discord, wherever. I'm here to help however I can. I love doing this stuff. See you in the next video. Peace. Also, subscribe to my channel.